Hello again, traders. Doing job there from DRFX, Forex and Trading, also known as Daddy Papi in the Dukas Coffee Forex community, and in the trading contest for this month of December 2017. Now, in this video, I'm going to be taking a look at last trade that was made for this month, which took place on the US Swiss franc earlier this week, and which helped to push overall return for the month of December to 28%. Which, as you can see here, is in sync with the overall return that I have as my target for my live trading account. So the overall objective of my methodology is that by aiming for just a few high probability trades on a monthly basis, this can translate into high turnover and a large rate of return on a monthly basis. And once you're able to capture this type of return each month, you put yourself in a great position to earn significant returns from this currency market in both the short term and in the long term. Now let's take a quick look at the overall summary of this trading methodology, where with the use of candlestick patterns and consolidation setups, the objective is to use the daily chart to provide market direction, with entry taking place on a 4-hour chart to target 50 to 70 pips within a short 24-hour period. Now, even though this is the average pip range for each trade, there are times when the market provides setups that can justify a trading target of less than 50 pips and trading targets of more than 70 pips. Overall, on average, risk-reward ratios of 1 to 1.5, 50 to 70 pip targets as stated here, and in most cases, stop losses of 40 pips are used, but in certain situations in which the setup is justified, a maximum stop loss of 45 pips is used as a way of capturing the identified trading gain. However, the 24-hour holding period is always obeyed. No trades are held for more than a day, because what I found is that whenever the market is providing these high probability trading setups, they usually do not take more than 24 hours to hit their targets. So this provides large trading gains and fast turnover, which can translate into large rates of return on a monthly basis. Taking a look at some of the summary statistics for the month, you can see here that only 6 trades were actually needed to capture that 28% rate of return. Again, in sync with the objective of the methodology of just targeting high probability trades that can provide large turnover and large rates of return. Each trade on average took just 16.5 hours to reach their target. Again, in sync with the fact that these types of high probability trades only require a maximum of 24 hours to hit their targets in most cases. Drawdown was just 3.86% with a maximum drawdown of 5.96, with this drawdown taking place on just 2 occasions. Now, in terms of this last trade that was made on the US Swiss franc, which represents a typical trade that is made with my trading methodology, here we had a situation in which the market was in the process of completing the formation of this pennant setup, where the market had already formed this support boundary and was now in the process of completing the formation of the resistance boundary by forming this second resistance point by U-turning here, with the U-turn leading to the break of this uptrend line and the formation of this bearish signal. So this was a signal that indicated the start of this bearish move, and once we identified this signal and placed a stop loss above the high of the formation, entry took place with the target set for the support boundary. And as you can see here, within a very short period of time, just 3 candles representing just 12 hours, the market was able to hit our target and provide us with this aggressive trading gain of 32 pips. So this overall setup and this trading gain complemented the previous trades that were made within the month. As you can see here, a couple of the other trades included a few losses along the way, but we also had these gains of 38 pips on the Swiss franc Japanese yen, also moving within consolidation. 109 pips on the pound Aussie dollar as it formed its pennant setup on the 4-hour chart. Small trading loss here, and a 73 pip trading gain that took place on the Euro Kiwi as the market was also moving within consolidation. In this case, also moving from resistance to support on the 4-hour chart. So what you'll find is that many of the trading opportunities that are identified take place within the context of the market either forming consolidation or already having formed consolidation and providing trading setups within the boundaries of resistance and support. And here you can see another example of the market providing trading opportunities within consolidation. This one that took place last month on the Aussie Canadian dollar on my live account, where I took advantage of the false breakout reversal that was taking us back inside of the consolidation and back to support, following the failed breakout attempt to break bullish, which led to the formation of this bearish double top formation and the trading gain of 65 pips in just 12 hours. So these are the types of trades and these are the types of setups that we can identify on the currency market each month. And once we're able to patiently wait on these high probability setups, we can experience significant trading gains in a very short period of time that can provide us with a solid foundation of trading success over the long term. So until next time, traders, take care.